What is up, traders? Steven here, your honest trading coach, and today I want to talk to you about something that bothers me and that should bother you too. And that is the fact that a lot of you are out here trading and risking your hard-earned money without even knowing how to read a price chart. And you may be thinking, Steven, I know how to read a price chart. I know what trend is. I know how to identify structure levels. But the question I would have for you is, the last time you looked at a chart, did you know exactly what trend that market was in? Or if it was in consolidation? Or did you hesitate and were you confused? Did you know exactly where your next major level of structure was? Because if the answer to that question is no, then this is something you still need to work on before you start risking your hard-earned money. And that is why in today's video, what I want to do is break down exactly how to read a price chart for you. That way you're not confused about that ever again. And that way you can start to correctly identify trend, major levels of structure and consolidation, and improve your odds of becoming a successful trader. So if that sounds good, make sure you go ahead, click that like button for me to help out with the YouTube algorithm. Click subscribe. It's down below the video to the right-hand side, because we come out with videos like this each and every week. I don't want you to miss them. While you do that, I'm gonna let the intro and disclaimer roll, and I'll see you on the other side. Trading in Forex or any other financial market comes down to nothing more than your ability to read a price chart. And your ability to read a price chart comes down to three factors. You have trend, consolidation, and major structure levels. You have to understand all three of these like the back of your hand in order to be a professional trader. And that's why today we're gonna go ahead and start out with trend. Now, trend for me has two different types. And what you're looking at on the chart right now is what I consider a clean trend. Now, a clean trend is when you can easily see the market making higher highs, higher lows, higher highs, higher lows, and so forth. I'll do this so you guys don't have to watch it. And we're back. So with this, you can see that the market consistently making higher highs and higher lows is quite easy to spot. It's very easy to tell that this market is in what type of trend. It's in an uptrend, right? We are in an uptrend because we're consistently making higher highs and higher lows. Now, this again is what I consider a clean trend. What we're gonna do is drop down to an actual chart, and we'll look at a clean trend on a chart, and then we're gonna define the other version of a trend, which is a dirty trend. So let's go down to a chart, talk about a clean trend. Let's find one. This would be a fairly clean trend, right? We have a low coming into a higher high, coming into a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This would be a very clean trend. This is a great example of a clean trend where we're looking for these higher lows and higher highs on the chart. This is so easy to spot, right? If you asked 100 people if this was an uptrend, they would all more than likely say yes. Now let's talk about where it becomes a little bit more complicated, and that's during what I call a dirty trend. A dirty trend is what the market normally does, and it looks more like this. We have our trend continuation, and then you might see the market do something like this. And this is probably what you're more used to identifying, right? And seeing in markets is something that looks more like this, and you might get another clean version of a trend afterwards. Now, this is what's really difficult for a lot of people to read. If you haven't ever studied how to identify trend on a price chart before, this is the hard part, right? And let me go ahead and do this for you to show you how simple we can make this. Let me go ahead and draw out our low to our high, to our higher low, and I'll speed this up yet again for you guys. Okay, so now looking at the chart, you may still be just as confused, but let me explain it. So essentially, in a trending market, this is a rule that I use 90% of the time. There are very few occasions that I don't use this rule, and we'll talk about those when we dive into a chart. But right now, looking at the chart, you can see that we have low to a higher low to a higher high. And you may be wondering, Steven, what about all these little moves in here? What do they mean? Well, essentially, they mean nothing. You see, in a trending market, what we're looking at is the previous higher low before the break of the previous high, and after that, when we start getting this pullback right here, when this market starts to pull back, we then are also looking at our higher high. So there we have our higher high and our higher low. We only know that's a higher low after the break of the previous high. So now that we have that information, everything in between these two essentially is nothing more than a retracement, than a pullback. No matter how junky a chart starts to look, no matter how dirty, and that's why I call this a dirty trend, no matter how dirty the chart starts to look in between here, it's irrelevant because this is all just a part of the retracement from the overall trend. So we're going to continue using this at the point that this market starts doing this consolidation, gets dirty in here, and then breaks up and goes above our previous higher high. What happens? Well, once we get above our previous higher high, we have a new higher high right here. And once we pull back from that higher high, what do we need to do when we start seeing this pullback? We need to look left and ask ourselves, after the break of this previous high, what's our lowest low looking left and below that? And what I mean by that is this is the creation of our next higher low. Because after the break and close of this higher high, after this new higher high was created, we now have the lowest low of the previous retracement or the previous pullback. If that didn't make any sense at all, rewind the video, watch that part about 3 times, and it will make perfect sense. I'll do it one more time in case you didn't catch on. So we have our higher high here. When that is broken into a new higher high, then we look left at the lowest point of the retracement from the previous higher high. This would be the retracement. Remember, all of this is the retracement. The lowest point of that is now our new higher low. And in a trending market, essentially, no matter whether it's a clean trend like we looked at earlier or a dirty trend like we're looking at right now, what we're wanting to make sure of and what we want to know to make sure we're continuing in that trend is that the market's not breaking below our previous higher low. So in this case, if this market would have pushed down and eventually closed below my higher low over here, then we would no longer be in an uptrend. That is the hint of the market giving you a hint that we could start going down or we could start a period of consolidation. We'll talk more about that in a second. Let's just stick on point here. What we need to see is that the market, instead of coming down here and closing below our higher low, that the market pushes up and creates a new higher high. Anything that happens in between, again, this market could have done this, 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 this for as long as it wanted to until breaking this high. Everything in between is essentially just a retracement from our last move from higher low to higher high. And to make this a little bit easier, let me do this. This is how I would be drawing this out on a chart. Let me grab a line, make it a completely different color, and let me make it huge. Let me make it really big. Okay, so this is how I'll be drawing this out. My initial high to low, or low to high, excuse me. My initial higher low to higher high is fine. This is how I would draw this out. I would be going from my higher high to my higher low. From my higher low to my higher high. From my higher high to my higher low. From my higher low to my higher high. Hopefully that helped anyone that was confused. That's how I would actually be drawing out price action. I would be avoiding all of the noise in the retracements because it does not matter in terms of what trend the market's in. As long as this market stays above my higher low, we're still considering this an uptrend, and the likelihood is that we continue that uptrend, no matter what happens in between. So that's how we read a dirty trend in the markets. Clean trends, like we talked about, hardly ever happen. These dirty trends are what you'll see most of the time, and this is exactly how you read those. So what I'm going to do now is take you down to a chart, and we're going to discuss this kind of dirty trend scenario just for a second, and then I'm going to teach you how to identify consolidation. So let's go down to the chart. Let's go ahead and move over here and see if we can find a dirty trend scenario. Okay, here's a really good example. We have our low, okay? We have a low. Let me zoom in to make this really easy. We have a low here to our high here, a pullback here to a new higher high, right? Does everybody see that? That is now telling me this market's in an uptrend. I'm looking for buying opportunities as long as the market stays above my previous higher low. This was our initial low. This was our first higher low. As long as the market stays above that, does not start closing below it, then we are still in what I consider to be an uptrend. And what I'm looking for is this market to break our new higher high to tell me we're in trend continuation to the upside. Now, what happens in between does not look very pretty. does not look very clean. This is an example of a dirty trend here on the pound Aussie chart. We're on the daily chart right now, and the reason it's a dirty trend is because, let me go ahead and go back to my normal black line here, because we have a push down, this period of consolidation, confusion, dirty price. This is all just dirty price in the midst of nothing more than a retracement until a continuation of trend. So all this entire area is part of the retracement from our previous higher high to our new higher low. So if we're drawing this in, now we have low, higher low, higher high, higher high, and higher low. So at this point, just moving forward just really quickly to make sure you're understanding this and you're getting it, at this point, this would be my new higher low. The market cannot break if we're going to continue in this uptrend. And whenever we start to get a pullback, like we did right there, this is my new higher high. And that's how we would continue looking at this. Right now, I'm looking for an uptrend. Unless the market breaks and closes below here, I'm looking for a new higher high. We get a new higher high. At this point, this new higher high comes up to, after our higher low, this new higher high comes up to about this area. When that happens, we get a new higher low, possibly. We don't know if this is a higher low. Not until we break into new highs. So we have to keep going with our higher low. This could be our higher low, depending if the market comes up and breaks above this high. So let's put our higher high on right and our higher low. At this point, what we are saying essentially with this trend identification technique is that unless the market closes below this previous higher low, then I still consider this to be in an uptrend, and I'm still overall expecting the market to continue higher. Let's see what happens, and we do in fact continue higher. So with that being the case, this analysis worked out perfectly. It won't always happen like that. We'll go through examples. I'm gonna go through a full chart with you guys over a long period of time so you can see examples of this working out and not working out. But remember, in trading, we're not trying to find something that's 100% accurate. That is impossible. You'll never find something that's 100% accurate. Our entire purpose as traders is just to gain an advantage over the market. And this, our ability to read a price chart, is nothing more than a tool we use to help us gain that advantage over the market. So diving back into the charts, or actually let's go up and talk a little bit about when we know the market's in consolidation. So right here, we've been in what? We've been in an uptrend, right? And we're going to do some examples of a downtrend as well. But at this point right here, we've been in an uptrend. How do we know when the market stops being in an uptrend? Well, as we've discussed, we have our new higher high. Whenever we start to make a pullback, let's go ahead and do that. Starting to make a pullback. Okay, we have our new higher high here. We'll pull it from this one. So we have our new higher high. What if price comes down and breaks through our previous higher low right here? Well, if price comes down and breaks through that level, it is indicating a possible reversal. It does not mean that we are now in a newfound downtrend. That's not what this means. It does not mean that we need to start looking for short trades right now or anything like that. This is just telling us to watch out. This is just telling us it's very possible that this market could now reverse or start a period of consolidation. So the way I judge this, after breaking through this previous higher low, is that we're going to either start consolidation or reverse. That is the likely scenario. So this is the point where you can start to identify a market as in consolidation. And this is what will happen many times. You'll see the market do that, then pull back up, then pull down, then we'll stick it out between this area. And when I say this area, I mean our new low and between that and our previous higher high. So now we have to move it down here. What we have is our new low and our higher high. I consider this market to be in consolidation until one of these levels is broken. If we break our higher high, we go back into an uptrend. If we break below our new low, I consider that now an actual downtrend, and I start looking for short trades. So this is the way I identify consolidation, is after that first break of my higher low to the downside, now I'm expecting either reversal or consolidation. I just classify it as consolidation until we break my new low or come back up and break my new high or my higher high, previous higher high. If one of those two things does not happen and I'm a trend trader, I do not trade. This is the time to be patient, sit on your hands. You won't always have trades, guys. That's just a part of trading. You have to be patient. But what I'm waiting on, essentially, is to see this market either do that, in which case, what do I count this as? This case, I would have this as my new low. I would have this as my lower high, or even high if it was real consolidation. We came back up here and tested that, and then I would have this as my lower low. Of course, we would wait on a pullback for this to be our lower low, but let's say the market does this, lower low, pushes up. Now we have a lower low, and now after a break, we have a lower high and a new lower low. And now we start looking for that trend continuation again, whether it be dirty or clean trends. That is the time, is after we get a breakout of the consolidation period. Consolidation classified as once we get a break of our higher low to the downside, we're waiting on either consolidation or a reversal. Reversal would be when the market comes up and breaks our higher high. Consolidate, or excuse me, that would not be reversal. That would be trend continuation. A reversal is when we break our new low. Then we go into reversal. We say, okay, now we're in a downtrend after this break of our lower low, our new low. After we get that and get to a newer low and a lower high, we go ahead and trade that high because now we're expecting the market to be in a downtrend based on our price action analysis. Now, I know that was a lot. Again, this is the most objective way I've ever found to read a price chart. There's a lot of subjectivity in price charts. That's why traders get so confused in moments like this and in moments where we're in a trend, but we're not in the clean trend. We're in a dirty trend. Traders get confused because they have no objective rules. And what I want to do throughout this video is make sure you understand and have objective rules for these scenarios. So now what we're going to do is go down to an actual chart. And we're just going to, I'll pick a random spot, okay? Not looking at the chart at all. It's scrolled all the way out. I'm just going to scroll back and forth until I stop. I'll stop right now. Okay, there's no price there. Okay, wait a minute. That didn't go well. I'll stop right here. Okay, right now we're on 7/6 of 2009 on the daily chart. So our starting point for this is going to be 7/6, which is right of 09. 7/6 of 09 is right here. Okay, so we're going to use this as our starting point. I'm not going to write out each of these because it takes way too long and it's probably really boring to watch me type starting point stuff. I'll just show you the starting point and we'll go from there. So from our starting point, we have a high to a lower high and a lower low. What are we in right now? What is this telling us? This is a downtrend right now. We are in this downtrend until what happens? Till we have a break and close above our previous lower high, and we are continuing the downtrend when what happens? When we get a break and close below our lower low. So the way we would draw this out is a new lower high, a new lower low, a new lower high, a new lower low, a new lower high. At this point, we're about to get a lower low. When we do, this will be our lower high right here. The lower high cannot be broken. If it is, then we are no longer in a downtrend. We're in a possible reversal or consolidation. What happens? We get our push down to a new lower low, a new lower high. We continue reading trend in this way. So we're going to get, this looks like a clean trend, right? If I was to ask you which kind of trend was this, this was a clean trend. What about dirty trends? So here we go. We're starting to get a little dirty now. That's making me very uncomfortable to say. So we have a new lower low and a new lower high. Right here is our lower high. Right here is our lower low. If we break above this previous lower high, what does that mean? That is the market showing us signs of a reversal or consolidation. If we break below our lower low, what does that mean? That is a sign that this trend will continue in the downward direction. If we just play around in between here, then what is that? That is consolidation in our retracement. That's all it is. This is just our retracement, all of it. The whole thing, no matter what the market does in between your previous lower high and your lower low, no matter what the market does in between those two, until one of them breaks, it's just consolidation. We're just consolidating in our retracement. We're in a dirty trend is the way I like to call it. So we're in that dirty trend. We come down, we retest support now. We've retested support. Let's see what happens. We push up. Oh, look at that. We broke through. So our analysis continued to be correct, although We have this large period of consolidation. Remember, this whole period of consolidation is just the retracement. That's all it is. It's just the pullback, and it's just the market not knowing exactly what it wants to do, which is going to happen a lot. The market is confused all the time, that's what makes it so confusing to try to determine what trend the market's in. But with these objective rules, the entire time that traders were losing money trying to go long from here and trying to go short right here because we're retesting support, oh, well, a long trade from here obviously will work out. But while traders are losing their minds during this consolidation, you still know your bias. You still know that previously we were in this downtrend. This is all just the pullback. You are good to go. You're not confused at all. You're going, okay, we're in a downtrend. The likelihood is this market continues in that downtrend no matter what happens between my previous lower high and this new lower low. So with that being the case, we do in fact continue in that downtrend. And we would draw that out by going lower high right here down to lower low. Okay, now that we've done that, we're pushing up and continuing higher. But that is an example of the dirty and clean trend. We got some good examples there of both. What I want to do now, since you understand, hopefully, and if you don't, just rewind the video. I know a lot of that can get kind of confusing, but what I want to do is break off now and start talking about major levels of structure. So let's jump back up to the whiteboard for this. Remove my drawings here, jumping back up to the whiteboard. In a downtrend, let's use a downtrend as an example here. In a downtrend, the market's pushing down, pulling back, pushing down, no matter what happens, right? We have all this noise and mess in between, then pushing down, then pushing back up, then pushing up, then pushing down. All the noise in between does not matter, just retracements, just retracements. In this trend, the major levels of structure that you want to pay attention to are the previous level of support the market has just broken. We're gonna go down to a chart. I'm gonna show you some of this, and I'll start anywhere. I don't have to start anywhere that I've looked. This is a principle that in markets shows up time and time again. And this is the way you spot those levels. A lot of times traders have problems with this because they'll be trying to trade. This will be a good example of this. They'll be trying to trade off this level. Well, why would you be trying to go long if you know, based on the way you read a price chart, based on our analysis, we're still in a downtrend right there, right? We have our initial high, low, lower high, lower low. After a lower low, what are we expecting? A continuation of this downtrend. So why would traders be trying to go long from here and trying to go long from here? This is why there's so much confusion around this type of trading. Based on the way we just read price, we want to be going short because we're in a bearish trend. The level of structure we want to pay attention to is 1, the previous level of support that is likely to turn into resistance for this market. And 2, the second level we want to pay attention to is the previous level of resistance before our lower low, or in other words, our lower high. So the major levels at this point, we have our high, lower high, high, lower low, high, low, I'll get it eventually, lower high, lower low. At this point, we would be wanting to pay attention to our low right here for possible trading opportunities because it's a major level of structure, and our lower high. If we continue the process, we have our low, our lower high. As the market pushes up, we want to pay attention to that low and to our lower high. This would actually be a lower low, and our lower high for possible trading opportunities. Now let's go down to a chart, take a look at a couple examples of this on a real chart. So as I scroll down here, we can look at a long example since we just did a short example. Okay, so starting at a random place, let's go with this period of consolidation. Okay, right here, we have lows, not like Home Depot and Lowe's, but actual lows of price. We have highs. We have the market eventually doing what? Breaking out. Boom, we break out. This is where the important levels of structure that I'm talking about come into play. Once we have this break of our previous resistance, let's go from the lowest low to the highest high. If we just broke this level of resistance right here, then what did I just say is a major level? The previous resistance that was broken is likely to become support. I didn't point this out on purpose. I literally just went down to a random place on the chart. Here is our previous resistance. What does it turn into for the market? Huge support. Awesome. What are we looking at next? Our next level is we break and close above right here. This is our what? This is our high. This is our high or low. What are the two levels we pay attention to after the market breaks and closes above them? Our high, or our higher high, whatever you want to call it, right here would be our level of structure. If the market pulls back, this is the level we want to pay attention to. All right, market pulls back into that level. Look at what happens. As soon as we pull back to the level that was resistance, what does it become? Support. Now, another important note, and let me try to find, I may have to actually look for this example, an example of coming down to the previous support level or resistance level. Okay, so here we are on a good example of using the previous lower high as your major level of resistance. So in this case, let's look at the chart. Let's define it. We have our push down that came from a high to a low, that was a bad L, to a higher, lower high, to a lower high right here. So we push up to our lower high, we push down, we break and close. Okay, so at this point, we have our exact situation that we are looking at. Lower high, lower low. What is our major level? Our major levels are the previous level of support that was broken and the previous level of resistance and or our lower low and our lower high. Those are the major levels we're looking at for possible trades. As we get up into our previous level of structure support, do we have any kind of trade right here? No, we do not. There's nothing to trade there. So what we do is wait on our second chance up here at our previous lower high. And once we get up there, we look and see if we can get a trading opportunity. Here we have a big swing high. It turns into an engulfing candle. It's big and red. We have a close below right beside it. We're seeing selling pressure. Since we're seeing selling pressure at a major level, that might be a time to enter the trade. And as you can see, this market took off to the downside from that. Yes, of course, this was a winning trade and it was cherry picked for example's sake, but go through the markets, test all this yourself. As with everything that I teach, don't just trade it. Let's switch over to the camera. As with everything that I teach, obviously don't go out here and just start trading based on this. This wasn't even a strategy. Again, this is just a tool that we use to help us gain an advantage over the markets, but it's a foundational tool that started my own path to trading success. Without this, if you're currently struggling or losing money, a big reason may be the fact that you never really learned how to actually read a price chart correctly. And I know it's difficult and it's agonizing to go through the market and just draw lines, but you need to practice this and gain experience. So go through the markets, drawing out lines for your new higher lows, your new higher highs, your new higher lows and higher highs for an uptrend, your new lower lows and lower highs for a downtrend. When you think the market's going into consolidation based on the fact that we broke either that lower low or that higher high, depending on the trend that we're in. Again, if this was a lot of information to handle, I know it was, then feel free to go back and rewatch the video. I hope that that will help you to completely grasp and understand how to read a price chart, because this entire video was dedicated to you mastering reading a price chart in any financial market, because I know how big of a component that is to trading success. Again, it was the foundations of my trading success, and I'm sure it'll be the foundations of yours as well. I really hope that you enjoyed today's video. If so, and you learned something, make sure to click that like button. Make sure to go ahead and subscribe if you're new by clicking the red button down below the video and the notification bell. If you're ready for some more advanced training, then we do offer that in what is called the EAP training program. You can find a link for that down in the description. This program comes with a full training course teaching the strategies that I use on a daily basis, teaching about risk management and discipline. Again, if you're interested, it's linked below. It's also a mentor program, so if you have any questions about trading, you can contact me through email, and it'll be me personally contacting you back with the answers to those questions. If you're not interested in that, again, that's totally fine. Just make sure that you are subscribed to keep getting the free educational content we come out with each and every week. I hope you have a great rest of your trading week. I hope you trade green. I can't wait to see you in the next video. Talk soon.